gonna be the ultimate, how's the dollar gonna respond to all this?
I don't worry about the dollar.
All his money's in gold now.
By the way, though, the bottom line is take a look at the relationship between gold and real interest rates. Right now, real interest rates are negative. When real interest rates just turn zero, don't even go positive. When real interest rates turn zero, then gold's going to struggle. But as long as interest rates remain unusually low, incredibly low, gold still, because there's no opportunity. Gold doesn't provide you any income. I just got online before I came here. I got online to look at as the market's selling off a bit. I'm looking at potential stocks that I want to nibble on, and I'm looking at stocks or mutual funds that are providing dividend yields from 5.5% to almost 8%. And I'm saying, that's nice. What does gold provide me? No income. Nothing. It only provides me the hope of appreciation. Once you introduce an opportunity cost of holding gold, see right now, what's the opportunity cost of holding gold? I just put some money into a CD at Citibank, and I got a whopping 0.6%. I was thrilled. The opportunity cost of holding gold right now is nothing. The opportunity cost of holding gold 2 years from now is going to be substantial, and it will make gold much less attractive of an asset. And I've got a chart that goes all the way back to the 1970s. You can take a look at real interest rates and gold, and you can see that they just go in the opposite direction. QE2 is a mixed bag, and I think I share the worry that others do that the long run implications are it's going to make it even more difficult for the Fed to come up with a viable exit plan.
Next question? Anyone?
Yep.
Well, talking about this quantitative easing, it's creating, I guess, a lot of...
I'll get you a mic. There, right there.
Thanks. Talking about the quantitative easing, it's creating a lot of money in the system. I guess that usually tends to create inflation. How come we haven't really seen that inflation in real terms?
Because it's not creating money in the system. I love it when I listen to the news media and they say the Fed's going to buy all of these bonds by printing money. The Fed doesn't print money. The only way the Fed, from buying bonds, the Fed will buy the bonds and give the banks credit, which adds to the reserves. But now what are the banks doing to the reserves?
Holding on.
They're holding on to it. Okay, it's not being. We haven't gotten to the point where all those excess reserves are creating money. It has virtually no inflationary implications in the short run. But once we get the banks in a position that they start lending money again, and they've got 1.2 potential of $1.8 trillion in excess reserves, and they start lending money out again, that will create money in a big way. And that's the inflationary risk. That risk is not for next year, but it is for potentially down the road. So that's why once we get banks actually to the point where they're starting to lend money again, the Fed has got to act quickly to pull those excess reserves out of the system. And that means that the markets that you guys are depending upon are going to be competing with the Fed dumping $1.8 trillion of debt on the marketplace. That's a worry, and that's a worry down the road.
Next question. Come on, you guys, I know all of you. Don't hold back.
You ventured a guess in a few areas, but you didn't in commercial property.
Yeah.
So I'm wondering, you showed that commercial property is so far down 46% off peak. Have we plateaued? Are we headed up? Or are we headed down?
The problem that I always have with that question, and I've received that question before, is I don't like to lump everything into a single understand what I said about the need for the American economy to transition, it means that we've simply got too much retail space. Because we've got to become a less consumer-oriented economy. And that means that the retail portion of commercial real estate has still got a lot of investments to go through. On the other hand, if we talk about office space, there's many aspects of office space that seem to me very encouraging. I like, as you might have guessed, I like the weak dollar. In fact, I will argue with another ahead of the curve, the dollar actually isn't as weak as people think it is. I like the weak dollar. Finally, American exports are becoming competitive. Exports are one of the strengths of the U.S. economy right now. It's why to everybody's surprise, manufacturing has been leading this economic recovery over the last 5 or 6 quarters. But manufacturing for export requires all sorts of things. It requires shipping, it requires finance, and that it requires a lot of international services. International services require office space. So I'm much more positive about the office market. I have to be the first to admit, I don't monitor every office market in the United States, and I know that there are some markets that have oversupply. Here in Houston, Mark and I were talking about this. When we headed into the energy bust in the 1980s, we headed into the energy bust after the city of Houston had, for 4 years in a row, produced more than 20 million square feet of new office space per year. Per year. We doubled the entire size of the stock of office space in Houston, Texas in 4 years. And then, we were just driving right into that storm. We didn't do that this time. We were building 3 to 4 million square feet of office space a year. The recession has come, and it has been a bit painful, but it's nothing compared to what we experienced in the 80s. I see the office space in Houston probably being the most interesting of the markets. The apartment market is a different story right now. It's a confusing story because we've got households in transition. We've got some households moving from being owner-occupied housing to rental-occupied housing. I will tell you that one of the things that we had thought might occur did not occur, and that is we thought this might be a boon to the apartment market. It hasn't been, because what's happened to these homes that were foreclosed on? 80% of them are turning into rental homes, okay? And so these people are going into single-family detached owner-occupied housing, into single-detached rental housing. We're probably building still far too many apartment markets, even though starts are down. We're probably still building a little bit too many apartment markets, units for the current economic environment. But that won't last forever. And the good news is that I think with the mortgage rules that we've brought in now, qualifying people more better will cause us to have more normal balance between the apartment market occupancy and owner-occupied occupancy. Houston's historical rate has always been remarkably low. Only about 35% of the Houston population lives in apartment complexes. That's really low compared to many other cities. But during the middle part of those past decade, the absorption rate was 90% of all new households formed in Houston, Texas, between about 2003 and 2008. 90% were going into owner